Welcome to the Chapter 2 practice problem video. I have a few problems for us to cover in this one, all about our job order costing, so focused on predetermined overhead rates and applying overhead to jobs. So the first one I'm going to cover here is exercise 2-1, and that said Harris Fabrics computes its plant-wide predetermined overhead rate annually on the basis of direct labor hours. So as you recall from reading in Chapter 2, with predetermined overhead rates, those are based on estimates that are done at the beginning of the period. Then we're going to use that predetermined overhead rate to apply overhead to jobs as we work on them throughout the period. So in this case here, we said at the beginning of the year, it estimated that 20,000 direct labor hours would be required for the period's estimated level of production. Also, it estimated that 94,000 of fixed overhead costs for the coming period and variable overhead of $2 per labor hour. Harris's actual overhead cost for the year was $123,900. Its actual total direct labor was 21,000 hours. So in this problem, the only thing required of us is to compute the plant-wide predetermined overhead rate for the year. So as a quick refresher, our predetermined overhead rate is always our total estimated overhead for the period, in this case the year, divided by the total estimated activity or allocation base. So that's all we need to concern ourselves with here. So let's focus on that first part, total estimated overhead. Well, we know that the company estimated 94,000 in fixed overhead and also had estimated variable overhead of $2 per direct labor hour. So the total variable overhead estimated for that period then would be the $2 per direct labor hour estimated times the estimated direct labor hours for the period. Again, keep in mind, we're going to be doing these things at the beginning of the period, so we don't know what's actually happened yet. So $2 estimated rate times the 20,000 estimated direct labor hours we'd expect to work. So total overhead then estimated for the period would be our fixed plus our variable, for a grand total of 134,000. So then our predetermined overhead rate would be that total estimated overhead, 134,000, divided by that estimated activity or allocation base of the 20,000 direct labor hours. And that gives us a rate of $6.70. And I'll push that out to a dollar thing here just to kind of be extra clear. And then keep in mind what our unit of measure is there. That's $6.70 per direct labor hour. So for every direct labor hour we worked throughout the period, or that our staff worked, we'd be applying overhead at this rate of $6.70 per hour. Okay, let's move on to exercise 2-2 and give a quick practice here to applying overhead costs to jobs. So 2.2 said Luth & Company uses a plant-wide predetermined overhead rate of $23.40 per direct labor hour, similar to what we had calculated in 2-1 for a different company there. This predetermined rate was based on a cost formula that estimated $257,400 of total overhead cost for an estimated activity level of 11,000 direct labor hours. And then we also were told the company incurred actual total overhead cost of $249,000 and 10,800 total direct labor hours during the period. That's our actual usage there and our actual cost. So 2.2 wants us to determine the amount of overhead cost that would have been applied to all jobs during the period. So another refresher for us here, applied overhead. Something we'd be doing throughout the period here as we work on jobs, as we move things closer and closer to being finished. That's always going to be our predetermined overhead rate times our actual activity, or usage of that allocation base for the period. Okay, again, we're applying overhead throughout the period, so now we're starting to know what really happened in terms of usage of that activity, whether it's labor hours, machine hours, or whatever. So in this particular case then, our applied overhead becomes the predetermined overhead rate of $23.40 per direct labor hour that was determined at the beginning of the period, times the actual usage of direct labor hours. Okay, so just be careful there. That's the 10,800 total labor hours that were actually used throughout this period. 10,800. So total applied overhead, $252,720. Now they had told us that the company incurred actual overhead of $249. Yeah, we didn't need that here, right? Because again, we're just focusing on applying overhead. Later on in chapter 3, we'll talk about why applied overhead throughout the period and actual overhead incurred could be different, frequently are different, and what we need to do to adjust for that. We'll worry about that in a bit. All right, I'm going to jump ahead to exercise 2-4. So that had said Fickle has 2 manufacturing departments, assembly, and then testing and packaging. The predetermined overhead rates in assembly and testing and packaging are $16 per direct labor hour and $12 per direct labor hour respectively. So $16 over here in assembly, $12 per hour here in testing and packaging. The company's direct labor wage rate's $20 per hour. And we've got the following information here for this job N60, whatever it constitutes. We've got direct materials costs assigned and direct labor as well. So the first thing we want to figure out is what's the total manufacturing cost assigned to job N60. So total manufacturing costs always going to be made up of our direct materials, our direct labor, and then that manufacturing overhead. And more specifically, that would be our applied overhead. Okay, so that's really what we're shooting for here, since we already know what direct materials and direct labor are. But let's kind of jot these out in a little mini matrix, reproducing that table right there just to help us keep track of everything. Again, we were given the direct materials and direct labor cost in both departments. So really we're going to try to focus on what's this applied overhead for these 2 jobs, or for this one job, excuse me, in both departments. Okay, so we know that the predetermined overhead rate is $16 per labor hour here in assembly and $12 per labor hour here in testing and packaging. But what we don't know explicitly is how many direct labor hours were worked in those departments for this one job. However, we do know that the company's direct labor wage rate for everybody apparently is $20 per hour. So let's real quick figure out how many labor hours were worked on this job at each department. So here in assembly, a total of 180 in direct labor cost was incurred. So if I take the $180 divided by the labor wage rate of $20 an hour, that means that 9 labor hours were worked on this job in assembly. Same idea here in testing and packaging. $40 in labor cost divided by that $20 per hour wage rate means 2 labor hours were worked on this job in testing. So now I can turn around and apply overhead here to this job. So the predetermined overhead rate in assembly was that $16 per labor hour. And we just said 9 labor hours were worked in assembly on the job. So 16 times 9 means I'm applying overhead of 144. Over here in testing, that predetermined overhead rate was $12 per labor hour. And just 2 labor hours were worked on this job here in testing. So 12 times 2, $24 in applied overhead just in that testing department. So now let's see what the total manufacturing costs are per department here. So I'm going to again use the numbers just to be explicit, try to avoid the cell references for these videos. Direct materials plus direct labor plus applied overhead. And then same idea here in testing. Direct materials, direct materials plus direct labor plus manufacturing overhead. Okay, so there's the total costs assigned in each department. Now we are looking for the grand total for the job as a whole, so I can just add those two numbers up. 664 in assembly, 89 in testing, for a total job cost of $753. And then part 2 just said, well, if job N60 consists of 10 units, what's the unit product cost? I'm just going to jot that down here. Not anything real fancy there, it's just the total cost of the job, $753, divided by the 10 units. We're just saying what's that average unit cost, essentially. And that's $75.30. Good deal. Now I'm going to move on to exercise 2-8. And this is about applying overhead costs again, computing some unit product costs, just doing things a tiny bit different. I want to give us some extra practice with different activity or allocation bases. So here in 2.8 it said Newhart assigns overhead costs to jobs on the basis of 125% of direct labor cost. So they're not using a dollar amount per direct labor hour or a dollar amount per machine hour or anything like that. They're using a portion or percentage of the direct labor cost in dollars. So here we're told the job cost sheet for this job 313 includes 10,000 in direct materials, 12,000 in direct labor, and a total of 1,000 units were produced in that job. So we just want to know what's the total manufacturing cost assigned to job 313, and then once again, what's the unit product cost. So total manufacturing costs, as we said back in 2.4, that's our direct materials, our direct labor, and our applied overhead. Just be explicit there for us. Now here for this job 313, we were told that's 10,000 in direct materials, that's 12,000 in direct labor, and now let's figure out that applied overhead. So regardless of what the unit of measure is for that predetermined overhead rate, we still fundamentally do the application of overhead the same way. It's still our predetermined rate times that actual activity or allocation base. So here to apply overhead, I'm saying 125% of direct labor cost. So 125% times the direct labor cost of $12,000. I'm applying $15,000 in overhead to that job. Another way we can kind of think of that rate is for every dollar in labor cost, we're applying $1.25 or $1.25 in overhead. It's certainly not uncommon in practice to see overhead rates that are based on percentage of cost rather than necessarily a dollar amount per some volume measure per hour and so on. Okay, so total cost of the job then, just the sum of those three buckets, direct materials, direct labor, and that applied overhead, total of $37,000. And then again, we're looking for the unit cost. We'll take that total job cost of $37,000 and divide it by the total number of units in the job, in this case, 1,000. So that unit cost, a nice even $37. All right, I had one more problem to cover here for now, and that was exercise 2-10. So I'll jump ahead here just a tiny bit. And 2.10 said Sigma Corp applies overhead costs to jobs on the basis of direct labor cost again. Job V, which was started and completed during the current period, shows charges of $5,000 for direct materials, $8,000 for labor, and $6,000 for overhead on its job cost sheet. Job W, which is still in process at year end, shows charges of $2,500 for direct materials and $4,000 for direct labor. So the first question is, should any overhead cost be applied to job W at year end? If so, how much? And kind of explain that. So job W, to reiterate here, was still in process at year end, and on its job cost sheet it was showing direct materials charges and direct labor charges, or costs incurred. So the first answer here is yes, we should be applying overhead costs to job W at year end. We're applying overhead throughout the period as we work on things based on this predetermined overhead rate, which in this case is based on direct labor cost. So job W has incurred some direct labor costs, so we should in turn apply some overhead to it in this same period. Now let's figure out how much. We know that overhead is applied based on direct labor cost, but we don't know what that rate is. However, job V, which was finished, shows charges of $5,000 for materials, $8,000 for labor, and $6,000 for overhead. So we can infer from that information what this predetermined overhead rate must have been. Just to be clear here, to make sure we're jotting this out, what I'm saying is for job V, we had direct labor of $8,000 incurred, and the overhead applied was showing there at the end of the year at $6,000. And this job's done. It means all the costs have been assigned to it, period, end of story. So I can figure out what that predetermined overhead rate must have been based on this. So my overhead applied was $6,000 versus labor cost of $8,000. So if I take that overhead cost divided by the labor cost, that means I must have been applying overhead at a rate of 0.75 or 75% of that direct labor cost. Right? For every dollar of labor, I'd have been applying 75 cents. And that's how I would have gotten to this 6,000. Okay? So again, that was the total applied overhead divided by that total labor cost. So now I can figure out what it would be for job W here. Job W had direct labor cost at the end of the year there of $4,000. So its overhead applied would be that predetermined overhead rate of 75% of labor cost times the labor cost assigned so far of $4,000. So I'm going to turn around and apply then $3,000 in overhead to this job W. Now the second question said, how will the costs included in job W's job cost sheet be reported within Sigma's financial statements at the end of the year? So let me just add real quick the direct materials we had in job W was showing on the job cost sheet at $2,500. So the current total costs assigned to job W, which is still in process, are made up of the $2,500 in materials, the $4,000 in labor, and now the $3,000 in overhead that we've applied. So grand total there of $9,500. Now job W is still in process at year end, so it's not done, it's not ready to sell. It would show up then on the balance sheet of Sigma Corporation. Go ahead and write this out, right? Under inventory, under work in process. Okay, still not finished. Just like all the costs for job V, which was finished, would show up under inventory as well, but under finished goods. That thing's done, it's ready to sell. So all of our product costs, if we think back to what we read here in chapter 2, these are what we call inventoriable costs. So product costs, aka manufacturing costs, aka inventoriable costs. They all flow through inventory is the point. No costs associated with any of these jobs that we're producing or working on will hit the income statement until the goods are actually sold, right? Till it hits through that cost of goods sold. Those things are on their way out the door. Okay, so any job that was finished and unsold, its cost would be associated with that finished goods account. Cost of any job still in process would be sitting in that inventory account called work in process. Okay, it shows up on the balance sheet. Well, that's the end of the chapter 2 practice problems. Feel free to back up and review any you need to, or send me any questions you have. Thanks.